Hey everybody, we've got a bloody day in the market and the Bitcoin miners are no different. And as many of you know, we had CPI release yesterday, gave a little bit of a risk on rally, and now today we have PPI to look over. And while in our recent reading today here, we see that it was a forecast of 3.3%, we actually got a 3.2, here's something that's a bit concerning. Our last reading of 3.5 was revised to the upside to 3.7%. And there's actually a trend we have been seeing for a while. With exception of November's read, you'll see that the previous stayed the same. Other than that, we basically get these revisions to the upside. In December, it went from 3.3, revised to 3.5. In September, it went from 1.8 to 1.9. October from 2.4 to 2.6. So is this 3.2 really what we're going to get in our next reading? Is it going to be revised to the upside? Maybe that's what the market's worrying about. Or maybe it's the policy changes, as mentioned by Bill Adams, chief economist of Comerica. Financial markets are paying more attention to announcements from the White House about tariffs and job cuts than the hard numbers. And while jobless claims have remained stable so far, they may not be accounting for the anticipated layoffs and hiring freezes of sectors relying on federal funding. He also mentions the Fed and potential rate cuts. And while the market's expecting 3 cuts, Adams says it's hard to know how the Fed will react to the current situation. If the Fed makes monetary policy decisions based on policies enacted today, they could make substantial cuts to interest rates in 2025. On the other hand, if they assume that the overall fiscal stance will be more supportive of growth after factoring in decisions likely to be made later this year, they may reduce rates only a little, if at all, in 2025. And at the end here, Adams suggests that the Federal Reserve may opt for a cautious approach, possibly implementing only a single quarter percentage point cut in 2025, stating that it'll likely be in July. Now we'll look at the Fed Watch tool and if it's changed at all, but I will say that it is not expected that we're only going to get 1 rate cut. Now we also have an article talking about the bond market and PPI's reading. Traders in bonds basically so far have shrugged off this morning's cool PPI, remain more focused on the less encouraging implications of the Fed's preferred PCE deflator. And this article basically highlights what's within the data. Components of PPI will feed into the Federal Reserve's preferred gauge of inflation, which is PCE, coming later this month, and it should push it actually slightly higher than the 3.1% CPI reading, mostly because of the 1% increase in airfares, 1% increase in hospital inpatient care, and the 0.5% increase in portfolio management services. And Mark Stryber, economic analyst of FHN Financial, says don't hold your breath for rate cuts until the dust settles on President Trump's policies. Now, target rate probabilities paint a different story. It's projected that we get a cut in June. And by September, the most likelihood outcome here so far is 2 cuts. This is our current rate, which is expected by September as a 5% likelihood. The most likely scenario is 2 rate cuts at a 41% percentage rate. Now, these numbers can obviously change as we get upcoming PCE and next month's CPI, as we see changes in unemployment, things of that nature. But still, at this point, the Fed Watch tool probabilities shows 3 rate cuts by the end of this year. 2% chance of leaving rates current, 12% chance of 1 cut, 28, almost 29% chance of 2 cuts, and 32% chance of 3 cuts. And while it's positive to see PPI come down from previous reads, we're basically still higher than where we were in terms of PPI as December. Our read in December was a 3%. And we're still hovering at a 3.2%. Clearly trending higher ever since late 2023, with some dips along the way, but you can see the trend has been going up. We need some consecutive reads to come down. We haven't really been seeing this. Last time we saw 2 reads that came down or came lower was basically in fall of 2024. But the positive here is this is the first decrease in multiple months that have been simply just rising. Now, I want to remind you that with Bitcoin, despite some pullbacks, despite some market fear, despite some drawdown, Bitcoin is continuing to be adopted. Bitcoin is cemented into Wall Street. It's not just becoming a part of Wall Street, it is Wall Street. Here's a list of publicly traded companies that own Bitcoin. This list is only going to grow, and these companies are only going to hold more and more Bitcoin as time progresses. The top company, obviously, MicroStrategy, with 500,000 Bitcoin, or 2.3% of the 21 million supply, of which it is not all mined yet, and of which there is many lost in translation associated with dead wallets. Next up on the list, a publicly traded Bitcoin miner, and we have quite a few of those holding massive amounts of Bitcoin. Marathon holds 40,000 Bitcoin, about a $3.2 billion value today. Riot, next in line, holds 18,000 Bitcoin. Then comes Tesla And then one of our favorites, CleanSpark, with 10,500 Bitcoin. This number is likely higher because they mine and hold more Bitcoin day by day. Also, HUD-8 at 10,000 Bitcoin, Coinbase 9,000 Bitcoin publicly held, and the list goes on and so forth. Surprisingly, Voyager Digital holds a little bit of Bitcoin. This is a bankrupt exchange. This Bitcoin is likely going to be eventually sold to pay out creditors. Who knows? But I will leave this down below. It's quite interesting to just see who holds Bitcoin and at what amounts. It also shows governments and countries that own Bitcoin. These numbers are likely to rise. USA's number will not decrease thanks to a strategic Bitcoin reserve. And while this news wasn't as positive as some had hoped, the big thing here is this opens up a whole new potential investor. And as said by H.C. Wainwright, the US Strategic Bitcoin Reserve is a monumental endorsement of the crypto, with this SBR, or Strategic Bitcoin Reserve, elevating Bitcoin's institutional standing. Bitcoin's status as a new treasury reserve asset may compel other large holders such as nation states and large publicly traded companies to add to their holdings, according to this report. This move mints Bitcoin's legitimacy in the mold of humanity's most historically prized asset, gold. And this strategic Bitcoin reserve enhances Bitcoin's institutional standing, marking it clearly as a sovereign grade store of value. And the move to not sell any Bitcoin, just create this reserve where we hold our Bitcoin, this neutralizes any fears of liquidations by the US government, which we did hear about late last year, if you guys remember that. It also mentions a Texas strategic reserve, and we did have recent news that Texas is introducing a second Bitcoin reserve bill that allows up to $250 million investment. And this came out on March 11. The Texas state government site showed that another Bitcoin reserve bill, or HB 4258, has entered the ring. This is the second Bitcoin reserve bill coming to the state, following Senate Bill 778, which is currently being reviewed by the House after passing a majority vote in the Senate. Now, unlike the first bill, this HB 4258 would grant the comptroller, which to me sounds like such a funny word, Texas chief accountant and financial watchdog, the ability to invest up to $250 million in the state's economic stabilization fund, balance in Bitcoin, or other kinds of crypto assets. Not only that, but this bill also allows municipalities and counties to invest in Bitcoin or any other crypto, but not more than 10 million of its funds may be allocated to crypto. This is the beginning, a cautious, limited approach. Once this hopefully passes, once states start adding Bitcoin, once they see as the years progress that this was a good decision, the limits become less limiting. We do have a hard date, May 24, for the first bill. They will review the bill and announce their decision to reject or approve it by May 24 at the latest. And according to Dennis Porter, House members might expedite this process, land the proposal on the governor's desk soon. Greg Abbott, the governor of Texas, is very pro-Bitcoin. Now, according to the Bitcoin Reserve Monitor, there's at least 21 states that are mulling over potential strategic reserves, with states on different stages in this bill getting passed or denied. 5 have been rejected, 19 are pending, and 2 are still considering proposals. There will be many that get denied. There will be many that have to go back to the drawing board, try again. Perhaps we have a limit on Bitcoin's amount that could be bought. Perhaps it's too bullish. I do think agreements will be made, and we will at least see some states starting to adopt a Bitcoin standard, starting to add to Bitcoin, seeing the writing on the wall, seeing where Bitcoin is going long term. Bitcoin is the modern day gold. And compared to last cycle, it's so clear that Bitcoin has become a part of Wall Street, has become cemented into the US and many other countries. Now, I did want to mention to you guys that the CME gap has been completely filled, and this is something that Bitcoin tends to always do. It always wants to fill its gaps, and it's a very big positive in my opinion that this has finally been completely filled. One thing we have been seeing on multiple time frames is RSI divergence. The RSI starts rising while the price continues dropping. Sellers are starting to get exhausted. We are looking at a reversal soon, in my opinion. And another thing is, while we have been selling off, we have seen volume start coming down. Bitcoin has hit literally a 30% correction. Our last correction was 32-ish%, and much longer in terms of the amount of time. Now, we are getting closer and closer to our previous peak, that 74,000. I do think if we can get to this level, that would be a fantastic last buying opportunity for Bitcoin this cycle, but perhaps the market has other plans. I personally still think Bitcoin is going to follow its cycle and we will end this year strong. I, right now, don't really plan on buying Bitcoin in late 2025. Can the market throw a curveball and break the 4-year cycle? I guess it's possible, although I doubt it, but you have to open yourself up to the possibility that if Bitcoin just keeps selling off, if we hit maybe a recession, if all the states get denied for a Bitcoin strategic reserve, if somehow we get some regulations that somehow hurt Bitcoin, which I doubt, but you have to be open to these possibilities. If Bitcoin continues down and is lower and lower and lower by late 2025, that would cause me to adjust and actually be a buyer in late 2025 rather than a seller. I find that to be unlikely, but it is something worth mentioning. If Bitcoin doesn't perform well this year, this cycle may forever be broken to some extent at least. But one thing's for sure, the halving will always impact supply and demand. There will always be a rally around the halving. And in my opinion, if we get a good crash in 2025, down to previous prices that we saw last cycle, this would be a first for Bitcoin. After it finally breaks its previous cycle high, after we get through the bear market, we typically don't ever look back. And I showed you guys this the other day, but I'll show you again, even though this video is getting very long. Let me show you what I mean. Here was the 2017 peak, right? We hit our bear market. Of course, we revisit those prices during the bear market. I'm talking about once we exit the bear market, once we get on our next cycle rally, we don't really ever break down into our previous peaks prices. Again, in the 2012, 2013 top, we see a pullback. Once we break out of this, we never revisit these prices. I think there's a good likelihood that we won't revisit the prices and that we are near the bottom. But do you guys think I'm right or wrong? Do you think Bitcoin cycle will forever be broken? I still see 150K as a very good chance for Bitcoin. Now, what have we been seeing as of late? We've been seeing Bitcoin sell off while M2 supply rises. Bitcoin is tied very closely to M2. There are delays. Look at how M2 starts spiking up before Bitcoin does. M2 is right at its peak, basically $108 trillion of M2 supply. We are nearly breaking over our previous peak that was set in September of 2024, September 15 of 2024. But you know, Bitcoin is going to track M2 global supply. Take advantage now while Bitcoin is cheap. Take advantage while there's as much fear as there was when Bitcoin was 49K. Anyways, that's all I got for you guys. How are you feeling today? How are you feeling about PPI and CPI that recently released? And how are you feeling about the Atlanta Fed projecting a negative GDP? There are definitely some concerns to the economy, and if we hit a recession, this will be the first recession that Bitcoin has experienced. Now, while it is a risk-on asset and is likely to sell off along with stocks, we have never seen what Bitcoin has done during a recession. Bitcoin was created after a recession. In the end, Bitcoin is a hard asset that will benefit from money printing. What always happens throughout history? Money printing. What will always happen on the long term for Bitcoin? The price will go up and to the right. So if we do hit some hard times, take advantage. Don't be fearful, be greedy. But anyways, that's it. I appreciate you guys for watching. Thanks as always, and I'll see you on the next one.